All right, so thanks for joining me in this video segment. What I want to share with you in this episode is the concept of attraction. And attraction is very dangerous in the stock market. So if you're really attracted to, let's say, certain types of stocks or certain types of indicators, it can be a huge problem. So we're going to cover that in this video when it comes to the mental game, where we chat about the mentality and the psychology of trading. Now, if you want to get into a deeper scoop when it comes to trading options, check out my other channel at tradersfly.com, which is also the website there as well. All right, let's take a look at attraction. And when we look at bees, in terms of attraction, they are drawn to plants with open or flat tubular flowers. And you might be wondering, why are we talking about bees when we really should be talking about the stock market? Well, because human nature is no different. When you're, a human, you're attracted to certain things. You're attracted to, hey, I want that stock. I'm attracted to a Tesla or a Fiverr or Nvidia or the Now or these companies like AMC. And all of these things have certain degree of attraction for us. So if we pull up like a stock chart of Nvidia, oh, I'm so attracted to it. It's so high. I want to get into it. But sometimes these are the worst trades to make. Sometimes they still work out fine, but in some cases, it's not the best trade. I know quite a handful of people that were attracted to, let's say, ServiceNow, and then the stock tumbled and they panicked and freaked out. I also know a handful of people that are attracted to Tesla, but again, they can't handle the volatility. And you might be attracted to these companies, and they do have a lot of benefits to them. Don't get me wrong. They have great liquidity. Their stock price is higher, so you can make more, let's say, on terms of options premium. They move quite rapidly, so you could actually make quite a bit of money, but you could also lose quite a bit of money. But there's nothing to say that other companies that maybe are not as attractive could actually yield you quite a bit of results. If we actually take a look at Tesla here over, let's just say from, let's just look at from May to June, and we look at just the growth potential here. Now, the growth here was 75%. Now, that's phenomenal, and that's fantastic. But it also depends on what strategy you kind of have. And if I look at, let's say, something like AAL from May to June, this growth was 46%. So what I'm saying is, hey, it's undeniable that Tesla, did better. There's no question about it. However, when we start looking at things, these stocks do quite well. And what you don't want to do is end up pouring all your money into one stock, where if that one stock went down, you'd have a problem. So the point is to sprinkle your money. And it's not to say that, hey, what if I deal with Bank of America? And you might say, this stock's not going anywhere. But what if you trade it differently? It's got a stable position. And if we look at the options world and we look at, let's say, Bank of America, again, boring company, you could say. When we look at Bank of America here, okay, and let's say we want to go ahead and sell options premium on it 30 days out. And I could go to the 28 and 26, and it's a $2 wide and so on and so forth. And looking at this premium, so this is a vertical spread that I'm selling, okay, and it's decaying about 50 cents a day, and you might say that's nothing. But the capital I'm using is $166, which is very different than if I was to do the same spread in terms of, let's say, Tesla. Now, you might make more in Tesla, okay, doing like a closer end spread here. But the problem is you also will dish out oftentimes more capital. So maybe $400, okay? So let's say you normally make, here we've got 5 contracts, and you put on about $2,000 on a Tesla trade, and you normally make about $525. And that sounds great. Yeah, I'm making $525. But what you could do, and realize you could structure a similar trade and concept on Bank of America where you can still make $525. Now, the thing is you'll have to trade more contracts. That's okay. But this stock acts and behaves differently. So here I could actually still make about $510 with more contracts. I'm risking about $2,400, $2,500. And the stock's behavior is differently. It's less volatile. And what does volatility mean? It means more risk. So when I trade with Tesla, I actually am putting on more risk. Whereas when I trade with the Bank of America, it's less risk. So you could make $500 in Bank of America. You could make $500 in Tesla. Which one's better? Neither. It's really a trade-off. What do you want in the marketplace? And the point being that I'm trying to make is that be careful when you start getting attracted to certain companies, because what will end up happening is all your attraction will gravitate to certain types of stocks. So you might have things like like you'll have Nvidia, you'll have a Tesla, you might have a Microsoft, people talking about AI and all this stuff. So you might have AMD. And now you've got a basket of stocks, but the problem is the basket of stocks is very similar. Just a few of these companies are running the show in the marketplace. And that might be great from a bullish move and so on. But what if these are the ones that start going down and then later the market turns around and your attraction is what's going to get you in trouble? So my point being is that go ahead and learn to spread your money and spread your capital, because there's a lot of other stocks like Bank of America or CVS that don't look exciting, but this one actually could be undervalued and might be ready for a turnaround. Even things like CCL, take a look. Back over here, nobody loved the stock, and then we had a pretty big turnaround. And if you actually look at the growth on this one, it actually beat out Tesla. It was up 121%. So think about that for a minute. A garbage stock, well, most people thought it was garbage, stock beat out actually some of the bigger companies out there. And when you start looking at it that way, this is where things get more interesting. So be careful when it comes to your attraction, because attraction itself can be dangerous, and that could be a problem. Because if you're attracted to certain types of, a flower, or you're attracted to certain types of things, then you're not open-minded enough to try out other things, and that could be a little dangerous, because that's where you might actually concentrate your risk in one spot, in one sector, at one time, or you just fall in love with the company that you'll still continue to hold it even when it's heading lower. So I hope this video gives you a little insight and opening to the concept of attraction, and maybe it opens you up to other things or trying other things, even if it's in small doses. Thanks for joining me. Feel free to grab some freebies here on our website. Check out tradersfly.com as well, and check out some of the great courses we have, along with the one-on-one sessions that I do in the coaching and mentoring segments when I work with people one-on-one on a longer term basis. Thanks, and I'll see you next time.